Welcome to today's explainer. When we talk about the AI revolution, we almost always talk about silicon, right? But today, we're actually exploring how light is powering the future. We're putting on our investment analyst hats to look at a company called Lumentum. They've rapidly transformed from a cyclical optical component supplier into, quite literally, the indispensable plumbing of modern AI infrastructure.
Okay, let's kick things off with a fundamental question. What is actually holding hyperscale data centers back from just expanding infinitely? As this AI supercycle moves from the training phase into reasoning and edge computing, the main constraint isn't just the microchips themselves anymore. The massive physical bottleneck facing tech giants like Microsoft, Meta, and Google is all about data transmission, heat, and power consumption. And the answer to that massive data and heat bottleneck? Well, it lies in photonics and co-packaged optics. Essentially, this is the science of replacing traditional copper electrical wiring with light. Think of it like taking a congested, overheated highway and replacing it with a sleek, high-speed fiber optic bullet train. By routing light signals directly into semiconductor packages without converting them back to electricity, you significantly reduce the two biggest enemies of AI scaling: heat generation and power consumption. It's an absolute game changer.
Moving right into Section 1, Lumentum's optical solution, and how they went from a component supplier to mission-critical infrastructure.
So Lumentum's primary weapons here are what they call their light engines. We're talking about supplying high-speed 1.6T transceivers that utilize cutting-edge 200G EML chips. These are essentially microscopic lasers acting as the absolute gold standard for AI interconnects. When you combine that with their optical circuit switching, or OCS, and their pioneering work in co-packaged optics, you've got a company supplying the exact hardware needed to eliminate the heat and power constraints of those massive GPU clusters.
And just listen to how their CEO, Michael Hurlston, frames their market position. He literally points out that virtually every AI network is powered by Lumentum technology. Whether they're working directly with the hyperscalers or acting as a critical component supplier to network equipment manufacturers, they've effectively become the must-have plumbing for the world's AI leaders. Let's jump to Section 2, Explosive Q3 2026 Financial Results, where we really visualize this AI supercycle turnaround.
Guys, this is an absolute turnaround story. If we look at the financials, quarterly net revenue surged over 90% year over year. They climbed from $425.2 million in Q3 2025 to a record $808.4 million in Q3 2026. And honestly, even more impressive than that, their GAAP operating margins flipped from a negative 8.9% to a highly profitable 21.6%.
But the really crucial point in this earnings report is this specific number: a 540 basis point, or 5.4%, sequential jump in non-GAAP gross margin. Management attributes this massive profitability improvement to strict operational rigor, serious pricing discipline, and a highly favorable product mix. They're just seeing incredible strength in their premium transceivers and scale across components like pump lasers. Now, if we break down that massive $808.4 million quarter, we can see exactly where the cash is coming from. Components obviously make up the lion's share at 66% of net revenue. But you really cannot ignore the system side of the business at 34%. That segment actually grew an astonishing 121% year over year, which is largely driven by the continued ramp-up of those optical circuit switches we talked about earlier.
Looking at their broader business segments, Lumentum has completely cemented its pivot to AI infrastructure. A massive 88% of their revenue now stems directly from cloud and networking. The remaining 12% comes from industrial tech, which includes things like the lasers used for 3D sensing in consumer electronics. So make no mistake, the cloud is undeniably their primary growth engine right now.
And the momentum? It isn't slowing down. They are accelerating even further. For the upcoming Q4 of 2026, Lumentum is comfortably projecting revenue to cross the $1 billion mark, guiding somewhere between $960 million and $1.1 billion. Plus, they expect non-GAAP operating margins to expand even further to between 35% and 36%. They're just easily crushing their previous targets.
Let's transition to Section 3, Strategic Growth and Analyst Upgrades, focusing on consolidation and capital deployment.
An aggressive M&A strategy is exactly what positioned them for today's super cycle. After spinning off from JDSU back in 2015, they methodically acquired key technologies over the years. But the real game changer was the 2023 purchase of LITE for $750 million. That specific acquisition was brilliant because it allowed them to provide fully integrated optical transceiver modules right as the AI cycle took off, essentially upgrading them from just a chip seller to a comprehensive systems provider.
And this strategy is totally paying off in the credit markets as well. S&P Global Ratings recently upgraded Lumentum to a B+ rating with a positive outlook. They specifically cited Lumentum's rapid deleveraging, dropping from a leverage ratio of around 10x in fiscal 2025 to roughly 4x in 2026, and they're anticipated to drop below 2x by 2027. Now, this financial health is massively bolstered by a highly publicized $2 billion strategic investment from NVIDIA designed to secure Lumentum as a key supplier for future co-packaged optics platforms.
All right, Section 4, Risks to the Supercycle. Let's balance the bull and bear perspectives, because every investment has risks. Let's weigh the viewpoints on Lumentum's soaring stock. On one side, the bulls point to a massive, seemingly endless demand for 1.6T transceivers, an OCS backlog that exceeds $400 million, and of course, that incredible $2 billion backing from NVIDIA. But on the flip side, the bears are raising some serious red flags about sky-high valuation multiples, the historically cyclical nature of optical hardware inventory, and an immense reliance on just a handful of major customers.
Drilling down into those execution risks for a second, the customer concentration issue is very real. A strategic shift by just a single hyperscaler could impact them heavily. Furthermore, their massive manufacturing expansion, which they've dubbed Project Vanguard, expanding facilities in places like Thailand and Greensboro, is going to require up to $1 billion in annual capital expenditure. Because of this massive overhead, free cash flow is actually expected to stay negative through 2027. It's a pretty stark reminder that hardware scaling is incredibly capital-intensive.
But the primary valuation concern for the bears really comes down to one single number, 90x. Lumentum stock has run up over 1,000% in a single year, leaving it trading at over 90 times forward earnings. From a strict value investing perspective, there is virtually no margin of safety here. That is a multiple usually reserved for asset-light software companies, not hardware manufacturers dealing with complex physical supply chains and massive capital expenses.
So I'll leave you with this final thought as we wrap up. As artificial intelligence infrastructure continues to scale at a breakneck pace, will Lumentum maintain its iron grip on data center networking, seamlessly guiding us into the era of co-packaged optics? Or will the notoriously cyclical nature of the optical market eventually bring these sky-high valuations crashing back to earth? It is going to be a fascinating transition to watch. Thanks for joining me on this explainer, and stay curious.